PepsiCo, ticker symbol PEP, is one of the most dominant food and beverage businesses in the world. They own iconic brands loved across the globe. Whether it's Pepsi, Mountain Dew, Gatorade, Doritos, or Lay's, you will see a PepsiCo product at nearly every grocery and convenience store. This dominant market position has driven big profits over the years. The stock is a dividend king, meaning it has over 50 years of consecutive annual dividend increases. These dividend payments, along with ample capital appreciation, have generated significant returns for investors. If you had bought PepsiCo stock in 1990 and reinvested the dividends, your total return would be over 3,300%. But is PepsiCo still a good stock to buy today? The stock price has fallen over 17% from its 2023 high. This makes it one of the higher starting dividend yields for PepsiCo in the past decade. So if you are looking for a reliable 3.5% dividend yield with growing dividend payments, then PepsiCo may be a great dividend stock to consider adding. The forward-looking P ratio is one of the lowest in the past decade. This is another strong signal that PepsiCo may be a potential value. In this video, I'm going to analyze PepsiCo's history, business model, stock financials, Q3 earnings summary, and give an updated intrinsic value calculation using discounted cash flow. Ultimately, I'll share whether I think PepsiCo is a stock to own in your long-term dividend growth stock portfolio. Let's roll the intro. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoy the video. Throughout, I will be using the best stock research tool, dividenddata.com. You can ask questions to your own AI investment research analyst and get decades of historical data to help you make smarter investing decisions. If the tool helps you find just one better stock, then more than pays for itself. And the best time to join is now, as you can lock in 50% off for life. Just click the link in the description and pin comment of the video to redeem this limited time offer. But let's get back to this Pepsi stock analysis. As the great investor Warren Buffett says, never invest in a business you cannot understand. So let's take a deeper look into the company's history and business model. Today, PepsiCo is a massive conglomerate of various food and beverage brands. But how did it get here? The foundation is built upon some of the most timeless American consumer staples. With Pepsi, its roots date back to 1893 when the Pepsi-Cola formula was first invented. Over the following decades, the business was formed, growing in popularity, slowly expanding distribution across the nation. Eventually, Pepsi-Cola would be sold across the globe. Alongside Coca-Cola, they created the modern soft drink and beverage industry. The Pepsi-Cola company was a cash cow on which PepsiCo would be built. With food, PepsiCo has equally historic origins. This time, the tale of two chip companies. In 1932, C.E. Doolan stumbled into a small San Antonio cafe and purchased a bag of corn chips. After learning the manufacturer was eager to sell his business, he bought the recipe and started making Fritos corn chips in his mother's kitchen. He sold them from his Model T Ford, forming the Frito Company. That same year, Herman W. Lay started a snack food delivery company in Nashville. He too bought out the manufacturer to form H.W. Lay and Company. In 1961, the two companies merged to become Frito-Lay. This was still just the beginning. In 1965, Pepsi-Cola and Frito-Lay reached a deal to merge the companies under the name PepsiCo. As the legend goes, both CEOs met and sketched out the deal on the back of a napkin. The goal was to leverage Pepsi's national and international distribution to help grow Frito-Lay, and that they did. They also recognized the complementary combination that salty snacks and soda seem to have. This marked the foundation from which modern-day PepsiCo was built. That same year, the new company was listed on the New York Stock Exchange under the symbol PEP for 75 cents a share. Over the next 60 years, PepsiCo would continue to grow by expanding distribution, creating new products, and acquiring countless brands. They bought whatever would fit into their core business model, even taking some more wild departures. For example, they bought 3 restaurant franchises, KFC, Taco Bell, and Pizza Hut. However, those were eventually spun off in 1997 under Yum Brands, which ended up being quite a successful stock in its own right. It's clear though that was a little bit of a side quest away from PepsiCo's core focus. So what does PepsiCo's business look like today? Well, let's break down how they actually make their money. Their largest business segment is PepsiCo Beverages North America. That is 30.21% of their revenue at $27.77 billion over the trailing 12 months. Frito-Lay North America is the second largest segment at 27.1% of their business. At 2.9%, they have Quaker Foods North America. So overall, about half of their revenue comes from the United States across both beverages and snacks. PepsiCo then has 14.81% of their revenue from Europe, 13% from Latin America, 6.6% from Africa, Middle East, and South Asia, and 5.2% from Asia Pacific and Australia. PepsiCo truly is a global company, and despite how mature their business is, it still continues to grow revenues over time. Since December 2020, their revenue over the trailing 12 months has grown from $70.3 billion to $91.92 billion as of the latest quarter. But to really understand PepsiCo's business, you have to know the brands they own and the competitive advantages that come from that. You have Cheetos, Doritos, Fritos, Gatorade, Lay's, Lipton, Mountain Dew, Muscle Milk, Pepsi, Quaker, Rolled Gold, Smart Food, Starry, Sun Chips, Tostitos, etc. They even have a partnership for Starbucks ready-to-drink beverages that are sold in grocery and convenience stores. PepsiCo quite literally controls large sections of every single grocery and convenience store. And to prove that, I went and did a little bit of field research for you guys to my local grocery store, and you can see that in the chip and snack aisle, a massive amount of shelf space is dedicated to PepsiCo products. The same is true with beverages. That is basically split 50-50 between PepsiCo products and Coca-Cola products. PepsiCo's highest quality brands give them a massive competitive advantage in the marketplace. They just sell, and stores have to have them. And PepsiCo is able to leverage that distribution network and shelf space to ensure that their other brands and products get into stores. And the top products, whether it's Doritos, Cheetos, Pepsi, Mountain Dew, those products have real brand power. Consumers have a mental association with it that has been built over decades, whether it's through marketing campaigns, partnerships, or simply existing as a part of culture. People grew up seeing, eating, drinking, and hearing about them. This mental shelf space for their core products helps protect them from competition, forming an economic moat. That is a concept popularized by Warren Buffett. But as I mentioned, PepsiCo's brands and distribution network are not just a defensive tactic. It can also be used as offense to expand the business. Under each of these brands, there are hundreds of product variations, and they leverage their existing brand to expand into new product categories, whether that's Gatorade protein bars or just some new snack flavor. There are so many examples, and the ideas are basically endless. And the company can easily leverage their shelf space and distribution network to get new product variants and even new brands acquired into stores. If you can't tell, they have a very strong core business model. PepsiCo is a fantastic business and is not going anywhere. But does that make the company a great investment today? Well, a lot of that depends on the price you pay and the future growth that ends up happening at PepsiCo. But before I get into that current valuation, let's take a step back and look at the general financial trends impacting PepsiCo stock. To do so, I'll be using my stock research tool over at dividenddata.com. The company is currently priced at $162 per share. The PE ratio over the trailing 12 months is 23.8. The current dividend yield is 3.35%, and the company is valued at a market cap of $222.2 billion. And as you can see, this company has slowly grown earnings per share over the long term, and stock price has largely followed suit. Revenue per share has grown at a 10-year compound annual growth rate of 4.35%. This has accelerated in recent history at a 3-year CAGR of 9.37%. Net income per share has grown at a 4.11% 10-year CAGR. Free cash flow per share has grown at a 2.48% 10-year CAGR, although it has improved from 2019 lows with a 3-year CAGR of 7.76%. The company currently has $8 billion of cash and short-term investments and $36.9 billion of net debt. But this is a company that generated $7.9 billion of free cash flow over the past year and $13.44 billion of cash from operations. So although it would be ideal if debt was lower, it is not a problem for the company. They return a large amount of this capital to shareholders via dividends and share repurchases. PepsiCo pays a quarterly dividend payment with a 10-year compound annual growth rate of 7.54%. The most recent Pepsi dividend increase was 7.11%, and this is pretty high growth considering they have a 3.35% starting dividend yield. The payout ratio is sustainable at an 84% free cash flow payout ratio and 73% earnings per share payout ratio. While this payout ratio is on the high end, PepsiCo is a very mature company that returns most of its capital back to shareholders. They also consistently buy back small amounts of stock every single year. From looking at the stock financials, my main concern with PepsiCo is their growing capital expenditures. This has expanded from $3.28 billion in fiscal 2018 to $5.52 billion in fiscal 2023. And if they could get this under control, then PepsiCo would be on path for increased free cash flow growth and increased dividend growth in the future. Because PepsiCo has been growing cash from operations and in fiscal 2023 hit a record of $13.44 billion. These numbers are lagging so far in fiscal 2024. So as of the latest quarter, what are the growth expectations and risks for PepsiCo stock? Last quarter earnings per share came in at $2.13, showing a decline of 5.03% year over year. And the company has been facing short-term trouble around consumer demand, affordability, and global instability. And this decline in GAAP earnings per share is one of the reasons that PepsiCo stock is down. So far, fiscal 2024 is trending behind 2023 based on both GAAP earnings per share and free cash flow. It's for this reason that PepsiCo stock has declined since fiscal 2023. But that might end up being a good buying opportunity if you're a long-term investor in PepsiCo stock. For the full year fiscal 2024, PepsiCo gave outlook of low single-digit increase in organic revenue and at least 8% growth in core constant currency earnings per share. So let's estimate the intrinsic value of PepsiCo stock doing a discount cash flow analysis. After that, I will take a look at analyst price targets and compare that to the current stock price. And if you stick around to the end of the video, I will give my opinion on if PepsiCo is a good buy and what type of investor PepsiCo would be a good fit for. So on dividenddata.com, if you ask for a discount cash flow valuation on PepsiCo, it will give you this calculator that autofills with all of PepsiCo's financial data, and you can make edits so that you can change the future growth rates over the next 5 years. The calculator defaulted to 0.83% growth of revenue in fiscal 2024, which I think will be accurate, 3.59% in fiscal 2025, and 4% in fiscal 2026. It then entered 0% for 2027 and 0% for 2028. So this is on the conservative end. They also had slightly growing EBIT margins and CapEx that's down from fiscal 2023. And then there are two different ways to do the discount cash flow. You can either do it based on a multiple of free cash flow that the company would be trading at that time, and then you back into the implied share price, or you look at the company in perpetuity and apply a terminal growth rate for those future years. And for that, I have a terminal growth rate of 2.5%. Looking at the company in perpetuity, it has an implied share price of $171.37, which implies 6% upside from the current price. If we do it based on multiple and assume they'll be trading at a 23 free cash flow multiple, then the implied share price would be $137.28 or a negative 14% downside. But that free cash flow multiple would actually be on the lower end of the range historically. So I'm going to raise it, but still keeping it a little conservative. Let's assume it trades at a 26 free cash flow multiple. That would give it an implied share price of $154, which would be 3% downside from the current price. So either way you swing it with this conservative discount cash flow model, PepsiCo is trading close to fair value. And if we take the analyst future estimates for revenue growth in fiscal 2027 and 2028 and plug that in, it will get even more bullish. So if we plug in 3.5% growth and 4.8% growth and do a 26 free cash flow multiple, then the implied share price for PepsiCo would be $167.60, which would be 4% upside. And if we look at it in perpetuity, assuming a terminal growth rate of 2.5%, then PepsiCo stock would have an implied share price of $186.38, which would imply 16% upside from the current price. If we look at analyst price targets, the average price target is $181.94. That would imply 12% upside from the current price. The highest price target is $198 and the lowest is $148. That said, among Wall Street analysts, the consensus recommendation is a hold. They are smack dab in the middle between being bullish and bearish. So overall, I would say that PepsiCo is a great business trading at a fair price. And if you are a dividend investor looking to retire off of your dividend income in the near future, then PepsiCo may be a great stock to add to your portfolio and start buying around these prices. You can get it on the historically high end in terms of dividend yield, and it offers a reliable and growing dividend payment. However, if you are purely looking for total return over the coming decades, then it may not be a great time to buy PepsiCo stock yet, simply because of their lower growth rates. The stock has underperformed the S&P 500 over the past decade, and I'd expect it to underperform over the next decade. And it's for that reason that I no longer have PepsiCo stock in my personal dividend growth portfolio. I'm quite young and focused on optimizing total return over the coming decades. I am not trying to retire off dividend income anytime soon, but all of this is just my opinion, so do not listen to it blindly. Be sure to do your own research before making any investing decisions. If you enjoyed the video, please leave a like, comment, and subscribe to the channel. And if you found the stock research tool I showed throughout compelling, then sign up at dividenddata.com. Click the link in the description and pinned comment, and you can lock in 50% off for life. If the tool helps you find just one better stock, then it more than pays for itself. The best time to sign up is today, and there will never be a better deal than this. And if you don't use this link, you can still get the deal by creating an account on the web app, selecting your plan, and entering the promo code AI at checkout. That's the promo code AI. Thanks for watching, and I'll see you in the next video.